So today we're going to talk about some big news that's just come out for the stock market. News that went, wow, I did not see that coming, but it's very, very good news for the stock market, and you've probably seen it in your accounts. Around about an hour ago, I've just got finished watching the Fed do their announcement and bring out the projections, and then Jerome Powell's just done his Q&A session. So this is the quickest turnaround I've ever had for a video, but I've just listened to what he said, and it's mega. It is, I did not expect it to happen, and it's a big Christmas present for the market. The market is getting excited. If you look at the S&P 500 right now, you can see that excitement. Look at that pop-up. Look at that little explosion that's gone on in the S&P 500. It's been all day waiting. It's been really flat, waiting for the Fed to come out. And wow, the Fed, they've shocked us. They've shocked us from a point of view that we were expecting one more interest rate to happen this year, and that hasn't happened. But also from a dovish point of view, we've seen the Fed be hawkish all year. And within this one meeting, they have swung from being so far away from where the market has been and saying, no, we are increasing interest rates still, no chance of cutting, to going and meeting the market. And we didn't expect it to happen. The Fed have just pivoted, confirmed, and the pivot isn't just a little pivot. The pivot is so close to where the market is. It's gone. The market has been pricing in. Inflation's done. Interest rates are going to start getting cut sometime soon. And we've heard all the time the Fed have gone, no, we're not doing it. We're not doing it. And all of a sudden, boom, this is Christmas. This is Christmas for the stock market. And the news is that good. I think this is the news that will see us break all-time highs in the S&P 500 probably this year. If it doesn't happen this year, it will happen in next year, I think, off this news. But I think this is the catalyst that we needed for the market to really kick on. And I didn't see it happening. I knew they were going to be. I knew the Fed were going to be a little bit softer than what they've been saying. But this pivot is unbelievable. And I was actually at the point, like, looking at Jerome Powell speaking, and I was like, this isn't Jerome Powell. This is just someone that looks like him that's saying this. No way he pivoted this much. And I've got to say, I think I'm going to take some credit here. I think the reason why he's done this big massive pivot is because I went to America in October and I grabbed him by the scruff of the neck and said, hey, so you don't start changing your look on this economy and these interest rates, we're going to head for a stock market crash and a big recession. So I think you got me to thank, because it was me that went up to him and had a few words with him. No, not really, but yeah, I generally was looking at him going, I can't believe he's saying this, and it's a big pivot, and we're going to look at it. Now, obviously, the market's reacting really positive off it, as you would expect. The news that came out was very good. But also what was really good is when you look at the S&P 600. The S&P 600 today is up 2%. Now, this is really good if you just bought the S&P 600 in the last 2 weeks. The S&P 600 is up even more than the S&P 500. Why is that happening? Well, obviously the thing is about the valuations. Obviously, valuation in the S&P 600 is obviously a lot cheaper. But the interest rates are so much bigger for the small caps. The fact that they're on about cutting interest rates is a far bigger bonus to the small caps, and that's why we've seen even a bigger rally for them. So if you've been buying the S&P 600 in the last 2 weeks, that looks like it could be on for a very good year. So we're really happy about that. But let's look at why the market's rallying so much. Obviously, the Fed come out with a statement. The big thing was the economic projections. Look at the change in these economic projections. So if you look at the GDP growth projections, so the bottom number is September. So last time we had projections to where we're at right now. So you can see here GDP growth was at 2.1% for this year. It's 2.6. So that obviously the Fed have said that we believe that the economy is going to grow faster than what we expected, which was, I think, very much expected. You've been looking at the numbers, they've been holding up. They did expect it to grow a little bit smaller than what they previously expected in 2024. Obviously, a slower growth year. I think that if they are going to do what these projections are, I think we might be all right. I think it might come in a little bit quicker, a little bit better than what they're expecting. 2025, 2026, I mean, that's just throwing darts on a dartboard. Like, we don't know so much can change in them 2 years, so I won't get too far into them numbers. Unemployment rate, Yeah, not much change there. 3.8, 3.8, 4.1, 4.1. No change on the unemployment rate, which is obviously good because obviously we aren't going to get a recession until the unemployment rate goes up, and it's not happening, and that's why we've avoided a recession so far. People keep saying recession, recession. As I always say, you can't get a recession until the unemployment starts going up, and the employment hasn't gone up, and that's why we've avoided a recession. It's not brain surgery to figure that out. Now, if you look at the inflation, this is where it starts getting interesting. So the Fed are actually expecting inflation to be lower than one they previously guided. So they were expecting 3.3, they're now expecting 2.8. Next year, they were expecting 2.5, they're now expecting 2.4. So inflation is coming down quicker than what they thought. Now, this isn't a surprise. We've known the Fed have been a little bit slow to notice how fast that inflation is dropping. And the key thing is when you look at the inflation data at the moment, we're only going up like 0.1. I think last month was like I think it was 0%. I don't think we increased at all. So there's only really a couple of months where we have a sharp jump in inflation. And when we start overlapping them, and I think January and February are both quite high ones. I think January is something like 0.6 and I think February is like 0.4 or something. So when we overlap January and February, you watch that inflation will drop very quickly on those months when we overlap those hard comps. So yeah, I think that's absolutely fine. And obviously they're probably priced in and seeing that oil coming down as well. Core inflation, as you can see here, once again dropping down more than what they were expecting. They were expecting 3.7 this year. It's actually going to be 3.2. Now, this is the big thing. The federal funds rate. So you can see here that they were projecting 5.6. They are now projecting 5.4. The reason why, as we talked about, they were going to do one more hike this year. What has happened? They haven't done it. They told us a few porkies. They said they were going to do one more increase this year, and they haven't done it. And that's the change that they've put in here. Now, this is where it gets even more shocking. So, as you can see here, the federal funds rate was expected to go from 5.6, I guess, really, to 5.1. They're now expecting the federal fund rate to go from 5.4 down to 4.6. So, what that means is that they are now expecting to do 3 cuts in 2024. Wow. There was a lot of talk going, is the Fed going to do 1 cut in 2024? But potentially we see 3 cuts in 2024. Now, if you imagine, when you look at the meeting times, that means that potentially if we're going to see cuts, we could see a cut as early as June time potentially. Now, not many people had that on their bingo card. Even the more bullish people on what the Fed would do, a few of them were expecting June. But the fact that the Fed themselves are suggesting that potentially we could see as soon as that. Because if you imagine, if you look at the meeting times, December, October, September, I mean, they could do September, October, December, and that would mean the earliest could be maybe September time. But it would be quite risky to do back to back to back. So you'd want to probably spread them out. So the sensible thing probably for them to do would be June, do a cut, see how we're doing. September, leave it for July, cut in September, leave it October, December. That would be the one that makes more sense, and that's why June seems like potentially where we see the cut, which no one really expected to happen. So that's a major shock from where we have been. So that's a massive pivot from the Fed, and that's why the market is getting very excited after this news has come out. Now, the only thing that has made me laugh with this news coming out, obviously we have seen the Fed basically come out and say, yep, we're not doing the last rate hike. They've basically come out, yep, we're doing no more rate hikes. And they've come out today and basically said, we are going to do more rate cuts than what you were expecting. Massive pivot from the Fed, and that's why the market's getting excited. We saw the gap between the market and the Fed. The market was pricing in a lot, and the Fed was going, no. Within one meeting, we've seen the Fed move to where the market is. Now, funny enough, if you actually go look at a few of the options and futures right now the Fed has jumped to where the market expectations is and where all the rally has been priced in this year. The market is already now, funny enough, starting to price a little bit more ahead of the Fed. And the market is actually starting to now price in, I think in March time, which would be not the next meeting, the meeting after, the market is actually now starting to price in a 62% chance of a cut in March. So it's quite funny really, because we've seen all of a sudden the market get so far ahead, and the Fed within one meeting has caught up to where the market is, and the market is already starting to creep ahead once again. And to say that the market is now starting to, I think it went from 40% to a 60% jump, that there's going to be a cut in March is crazy. So it's funny now that the market is now jumping so far ahead of the Fed, and we'll see if that's priced in, because if the market does start pricing that in now, that's what we talk about. That's where the catalyst is for the S&P to break the all-time highs. We're basically about 70 points off now, breaking the S&P all-time highs, and that's what will drive us forward. If the market starts pricing in once again being ahead of where the Fed is, that's what will get everyone excited. So yeah, overall, no surprise to see why the market's jumping today. Big surprise to see that big jump in the Fed. Obviously, we know they were playing the hard game a little bit, but even so, this is a big surprise. But I think it's good from the Fed. I think they've made the right decision. I was worried the Fed were going too far in one direction as they normally do, and too long on the other direction they do, as they normally do. And I would say that potentially they went one rate hike a bit too much. But the pivot that they are doing, I think, has just come about at the right time. So far, I've been very criticising of the job that Jay Powell has done, and I do think he went one hike maybe too far, but at least he's starting to pivot at the right time now, and it looks like he's so far doing okay. He's doing okay at the moment from this situation, and I think he needed to do that, the pivot, to give the markets and the economy the bit of like, we're nearly there, so that the unemployment rate and the GDP numbers don't take a tumble, and give the optimism there that, go another 6 months, get that inflation down, overlap a few more numbers, and we'll be in a good place. I think that's what he said. So yeah, if the market is seriously, starting to think 6 months down the line, and you start thinking 6 months down the line, you're starting getting your rate cuts and the economy holds up, it looks all right, doesn't it? It looks all right, and I think that hopefully I think we've got the kickstart for what potentially will be the key things to see the rally into 2024 anyway. So good news once again. Hope you enjoyed the video, guys. See you in a bit.